They sold you a story etched into the very foundation of modern culture, whispered in every motivational seminar, screamed from the cover of every business magazine. The story of the hustler, the grinder, the titan of industry fueled by a sleepless mania, a relentless 24/7 assault on the frontiers of success. They showed you the entrepreneur, eyes bloodshot, bathed in the blue glow of a laptop screen at 3 in the morning, closing one more deal. They showed you the trader, a caffeine-fueled nerve center surrounded by a constellation of blinking screens, executing 100 trades before breakfast. They showed you the executive, striding through an airport, phone pressed to their ear, a blur of perpetual motion, a human embodiment of the word more. The implication was always the same, a gospel preached from the pulpits of productivity. Action is virtue. Busyness is business. To rest is to rust. To pause is to fall behind. Your worth is measured in the density of your calendar, your success, a direct function of the velocity of your life. This belief, this entire paradigm, is the single most debilitating lie ever sold to the ambitious mind. It is a carefully constructed mythology designed to keep you spinning on a hamster wheel of frantic activity, mistaking motion for progress, and confusing exhaustion with achievement. It is a cult, the cult of activity, and its only true product is burnout, anxiety, and a portfolio of mediocre decisions. Because the foundational secret to the empire of the man they call the Oracle of Omaha, the core programming of his $90 billion mental operating system, has absolutely nothing to do with speed. It has nothing to do with volume. It has everything to do with a power so profound, so counterintuitive, so antithetical to the modern world, that it is almost invisible. It is the power of the intelligent, deliberate, and strategic no. It is the superpower of profound inaction. Warren Buffett's fortune is not a monument to the thousands of things he did. It is a fortress built from the million things he didn't do. While you have been taught to be a financial sprinter, to chase every opportunity, to swing at every pitch, he has been a crocodile. Motionless. Waiting. Conserving his energy for months, even years, ignoring the frantic activity of the herd, preparing for the one single moment when a fat, slow, and certain opportunity wanders to the water's edge. His genius is not in the strike, it is in the waiting, it is in the filter. He is not a better actor, he is a better editor. While the world tells you to build a bigger engine to go faster, he has spent 60 years perfecting his brakes. He has designed a psychological filtering system of such ruthless efficiency that it automatically screens out 99.99% of all incoming opportunities, leaving only the vanishingly rare certainties. This is not a documentary about how to find the next hot stock. This is a deconstruction of a psychological operating system for decision-making invincibility. We are going to hand you the blueprints to his filter. A system built on 3 impenetrable layers of discipline that, once installed, will protect you from the single greatest threat to your wealth. Your own, neurologically ingrained, culturally reinforced, and utterly fatal urge to do something. Prepare to uninstall the myth of the hyperactive hustler and install the operating system of the patient predator. The year is 1999. The world is gripped by a fever. A new religion is sweeping the globe, promising salvation not in the afterlife, but in the immediate, glorious, and digital future. Its temples are the gleaming office parks of Silicon Valley, its prophets are 25-year-old CEOs in t-shirts and sandals, and its gospel is written in the language of eyeballs, burn rates, and network effects. It is the dot-com bubble, a collective global hallucination, where the timeless laws of economics have been declared null and void. Companies with no profits, no revenues, and in some cases no actual products, are achieving valuations in the billions of dollars overnight. A company that sells pet food online, Pets.com, is worth more than established, profitable, century-old industrial giants. The NASDAQ index, the high altar of this new faith, is on a near vertical ascent, doubling, then tripling, in a matter of months. The financial media has lost its mind. Pundits who just years before preached the virtues of balanced budgets and steady earnings are now speaking in tongues, babbling about paradigm shifts in a new economy to which the old rules no longer apply. To question this new reality is to be branded a heretic, a fossil, a Luddite who just doesn't get it. The social pressure is immense. Your neighbor, your dentist, your taxi driver, they are all day trading their way to fortunes on stocks like eToys and Webvan. They talk of their gains at dinner parties, their casual confidence, a stinging rebuke to your own cautious prudence. The message is clear: get in or get left behind forever. This is the moment of maximum social proof, the peak of the tyranny of action. The entire world is screaming, in perfect, deafening unison, do something. And in his quiet office in Omaha, Nebraska, the most successful investor in human history, the man whose entire life has been dedicated to the allocation of capital, does precisely nothing. He watches the mania unfold not with greed, but with a detached, almost clinical curiosity. He attends the annual Sun Valley Conference, a gathering of the titans of media and technology, and listens to the euphoric pronouncements of the new digital messiahs. They pitch him their world-changing ideas, their can't-miss IPOs. He listens politely, and he says no, again, and again, and again. His largest company, Berkshire Hathaway, is sitting on a mountain of cash, tens of billions of dollars, earning a paltry return in short-term treasury bills. The stock market, by contrast, is a raging bonfire of wealth creation. Berkshire's own stock begins to lag the S&P 500, then to fall dramatically. Shareholders, conditioned by decades of market-beating returns, grow restless. They write him letters, questioning his judgment. The media turns on him. Barron's, the venerable financial weekly, runs a now infamous cover story. The headline, "What's Wrong, Warren?" The article portrays him as a relic, a man whose folksy, value-based approach is hopelessly obsolete in the brave new world of the Internet. He is a dinosaur, stubbornly chewing on bricks-and-mortar businesses while the sleek new mammals of the digital age inherit the earth. For 2 solid years, as the bubble inflates to its most grotesque proportions, Warren Buffett underperforms. He is publicly mocked. He is privately doubted. He is, by the judgment of the entire financial world, definitively and catastrophically wrong. This story is the foundational text for understanding the rest of this documentary. It contains every psychological element of the filter we are about to deconstruct. It is a perfect, real-world stress test of a mindset that values inaction over action, certainty over opportunity, and personal conviction over social proof. The world calls his decision not to invest in the bubble a moment of brilliant foresight, another example of the oracle seeing the future. But that word, foresight, implies prediction. It implies he knew when the bubble would pop. He has always been adamant that he had no idea. His decision was not an act of prediction. It was the automatic, inevitable output of a psychological operating system, an architecture of thought so robust that it made participation in the mania a psychological and logical impossibility. He didn't have to predict the storm. His filter had already told him not to set sail in the first place. This is not a story about predicting the future. It is a story about a system of thought that makes predicting the future irrelevant. A system that you can learn, that you can install, and that we will now, piece by piece, reveal. Welcome to Part 1, The Tyranny of Action. The human brain, the 3-pound universe between your ears, is a marvel of evolutionary engineering. It is a survival machine, honed over millions of years of brutal, unforgiving trial and error on the African savanna. Every one of its instincts, its biases, and its heuristics was designed for a single purpose: to keep your ancestors alive long enough to reproduce in a world of immediate, lethal threats. In that world, inaction was almost always the wrong strategy. When you hear a rustle in the tall grass, you don't form a committee to analyze the statistical probability of it being a lion versus the wind. You run. The hominid who ran and was wrong wasted a few calories. The hominid who paused to think and was wrong was removed from the gene pool. When a rival tribe attacks your village, you don't wait for a perfect plan. You grab a spear and you fight. Action, however imperfect, is infinitely preferable to paralysis. This deep, primal wiring is what psychologists call the action bias. It is our innate, default tendency to favor action over inaction, even when there is no rational evidence that doing so will lead to a better outcome. We are constitutionally programmed to believe that doing something is always better than doing nothing. This ancient software, once essential for survival, has become a catastrophic bug in the complex, abstract world of modern knowledge work, business, and investing. The threats we face today are not the immediate physical dangers of the savannah. They are the slow, creeping dangers of complexity, of misinformation, of emotional contagion. The rustle in the grass is no longer a lion. It is a sensational headline on a financial news network. The attacking tribe is not a group of warriors with spears. It is the psychological pressure of watching your peers get rich on a speculative asset you don't own. In this new environment, our instinct to act, to do something, is no longer our savior. It is our saboteur. It is the engine of our most costly mistakes. The financial world is a multi-trillion-dollar machine designed specifically to exploit this bias. It thrives on activity. Your broker makes money when you trade, not when you sit still. The financial media makes money when you are engaged, worried, and eager for the next piece of information, not when you are calmly reading a book. The entire industry is predicated on creating a sense of urgency, a feeling that you must act now or miss out forever. This urgency is the fuel for the second great enemy of rational decision-making, FOMO, the fear of missing out. FOMO is not just a modern social media phenomenon. It is a deeply ingrained part of our social nature. For our ancestors, being excluded from the group, being left out of the hunt or the migration, was a death sentence. We are wired to feel intense anxiety at the prospect of being left behind by the tribe. The dot-com bubble was a perfect expression of this instinct on a global scale. The tribe of investors was stampeding towards a perceived paradise of digital riches. Every news report, every conversation reinforced the same message: the herd is moving and you are not with them. This triggers a primal panic. The rational, analytical part of the brain, the prefrontal cortex, is bypassed. The emotional, instinctive part of the brain, the amygdala, takes over. The question is no longer, is this a good investment? It becomes, how can I stop this painful feeling of being left out? The only way to stop the pain is to join the stampede, to buy, to act. This creates a terrifying feedback loop. The more people who buy out of FOMO, the higher prices go. The higher prices go, the more intense the FOMO becomes for those still on the sidelines. It is a bonfire of social proof, where each new participant is another log thrown onto the flames. Reason is incinerated. The only thing that matters is getting in before the gates to paradise close forever. Compounding this madness is a third cognitive glitch, the illusion of control. Humans have a deep psychological need to feel that they are in control of their own destiny. We are uncomfortable with the idea that our success or failure might be subject to randomness or forces beyond our influence. The act of doing something, anything, is a powerful antidote to this anxiety. It creates the feeling of agency. Checking your stock portfolio 10 times a day doesn't change the value of the underlying businesses, but it makes you feel more in control. Constantly tweaking your investments, selling one thing to buy another, doesn't necessarily improve your returns. In fact, studies show it almost always harms them due to transaction costs and bad timing, but it makes you feel like you're actively managing your fate. You feel like the pilot of the plane, even if you are just a passenger randomly twisting knobs. This toxic trinity of cognitive flaws, the action bias, the fear of missing out, and the illusion of control, creates a perfect storm of self-destructive behavior. It turns the aspiring investor into a puppet, his strings pulled by ancient instincts, social pressures, and a desperate need for a sense of control. He is constantly moving, constantly trading, constantly reacting to the noise of the market, believing he is making a series of rational, empowered decisions. In reality, he is simply a leaf in the wind, tossed about by the gusts of his own unexamined psychology. This is the psychological state of the average market participant. It is a state of perpetual low-grade panic, punctuated by moments of euphoric greed. It is a recipe for disaster. Warren Buffett's first and most profound act of genius was not in finance, but in psychology. It was in recognizing the existence of this internal prison and dedicating his life to engineering a systematic escape. He understood that the greatest enemy was not the market, not the economy, and not the competition. The greatest enemy was the man in the mirror. He knew that his own brain was just as susceptible to these biases as anyone else's. His intelligence was not in having more willpower to resist them, but in designing a system, a set of rigid, inviolable rules that made it almost impossible for these biases to take control. He did not defeat his impulses through sheer force of will. He made them irrelevant through superior architecture. This is the fundamental cognitive shift you must make. You must stop trying to be a better reactor. You must stop trying to have stronger willpower. These are losing strategies. You are fighting against millions of years of evolution. Instead, you must become an architect. You must build a system outside of yourself, a filter that your decisions must pass through, a set of rules that you obey with quasi-religious devotion, a system that forces you to be disciplined when your instincts are screaming at you to be reckless. In the coming chapters, we will hand you the detailed schematics for this filter. We will deconstruct its three great layers, the interlocking disciplines that together create the power of strategic inaction. But first, you must accept a terrifying truth. Your instincts are your enemy. The voice in your head that tells you to do something is not the voice of opportunity. It is the voice of your ancient, savanna-dwelling ancestor, trying to solve a modern, complex problem with a primitive, outdated tool. You must learn to ignore that voice. You must learn to build a new one. Welcome to Part 2, the architecture of the filter. A filter is a simple device with a profound purpose: to separate the essential from the extraneous. A water filter removes impurities, leaving only pure H2O. A spam filter removes junk, leaving only the messages that matter. A psychological filter does the same for decision-making. It is a conscious, premeditated system for removing the endless stream of noise, distraction, and low-quality opportunities so that you can apply your finite cognitive and financial capital only to the things that truly matter. Buffett's filter is not a single rule, but a multi-layered system of thought, an architecture of discipline. It consists of three primary layers, each designed to screen out a different category of bad decisions. Together they create a near-impenetrable barrier against the tyranny of action, forcing a state of profound patience and extreme selectivity. The first and most powerful layer of this filter is a mental model that Buffett has described as the single best piece of investment advice he's ever heard. It is the concept of the 20-slot punch card. Imagine that when you are born, you are handed a punch card with only 20 slots on it. Each time you make a significant capital allocation decision in your entire life, an investment, a career change, a major business initiative, you have to punch one of those slots. Once you have punched all 20, you are done. You can make no more decisions. Now think about how this would change your behavior. Would you waste a punch on a speculative, half-baked idea? Would you use a precious slot on a hot tip from a friend? Of course not. The extreme scarcity of the slots would force you to adopt an entirely different standard for what constitutes a worthy yes. You would wait. You would research. You would think not for days or weeks, but for months, even years. You would only swing at the absolute fattest, most certain pitches, because you know that each swing permanently reduces your finite supply. This is not just a clever thought experiment. It is the operating system that Buffett runs in his own mind. He treats his decisions as if they are a rare and precious commodity. This mindset has several profound psychological effects. First, it completely short-circuits the action bias. The default is no longer yes, but an overwhelming, deeply ingrained no. The burden of proof required to get to a yes becomes immense. An idea doesn't have to be merely good. It has to be so spectacularly, obviously, overwhelmingly good that it is worth 1/20th of your entire decision-making life. This automatically filters out 99% of all inbound noise. Second, it eradicates FOMO. The fear of missing out on a speculative mania is replaced by a much more powerful fear: the fear of wasting a punch. The anxiety of being left behind is dwarfed by the terror of making a permanent, irreversible mistake. The punch card mindset reframes the entire emotional landscape of decision-making. It makes you value what you have, your unpunched slots, your capital, your focus, far more than what you might potentially gain from a questionable venture. Third, it forces a deep and abiding humility. It makes you acknowledge the limits of your own knowledge. If you only have 20 punches, you can't afford to be a jack of all trades. You must specialize. You must focus only on the areas you understand with absolute crystalline clarity. You cannot afford to dabble in things you don't comprehend, because a mistake is too costly. This leads directly to the second layer of the filter, a concept that is both profoundly simple and brutally effective. It is the rule of the too hard pile. For Buffett and his partner Charlie Munger, every potential opportunity that crosses their desk is immediately sorted into one of three mental baskets. The first basket is the IN pile. These are the rare, wonderful businesses that they understand deeply, that have a durable competitive advantage, are run by honest and able managers, and are available at a sensible price. The second basket is the OUT pile. These are the businesses they believe are demonstrably bad, competitively disadvantaged, in declining industries, or run by untrustworthy people. But it is the third basket, the biggest basket by far, that holds the secret to their success. This is the too hard pile. The too hard pile is the repository for anything and everything that does not meet the standard of being simple, predictable, and within their core area of expertise. A biotechnology company pioneering a new form of gene therapy? Too hard. A technology company whose competitive advantage rests on a complex algorithm they don't understand? Too hard. A cyclical manufacturing business whose future earnings depend on forecasting the price of a raw commodity? Too hard. The genius of the too hard pile is that it is an act of supreme intellectual honesty. The average person, especially the ambitious, intelligent person, is terrified of admitting they don't understand something. It feels like a failure. So they pretend. They form an opinion based on superficial knowledge, they read a few articles, and they convince themselves they have an edge. This is a fatal ego trap. Buffett and Munger have no such ego. They take positive delight in admitting their own ignorance. They have famously said, "We have three baskets for investing: yes, no, and too hard. We have a very big basket for too hard." They are not trying to be the smartest people in the room. They are trying to be the most rational. They are not trying to solve the most difficult puzzles. They are trying to find the easiest ones. The too hard pile is the ultimate cognitive energy saver. It allows them to discard the vast majority of investment opportunities with zero mental effort. They don't waste a single calorie of thought trying to understand a business that is intrinsically complex or unpredictable. This frees up 100% of their mental bandwidth to focus on the small handful of simple, high-quality businesses that fall into their IN pile. This discipline is the engine of their patience. They can sit for years without making a major investment because their filter is so ruthlessly efficient. They are not tempted by the siren song of complexity or the allure of the next big thing. They are simply waiting for an easy puzzle to appear. A puzzle they know, with near certainty, how to solve. This brings us to the third and final layer of the filter, the psychological state that these first two layers are designed to produce. It is the mindset of the patience predator. In the wild, there are two primary survival strategies. There is the strategy of the herbivore, the wildebeest, the zebra. The herbivore is in constant motion. It must graze for hours every day, always on the move, always exposed, always vigilant for threats. Its life is a frantic scramble for sustenance, punctuated by moments of terror. Then there is the strategy of the apex predator, the lion, the crocodile. The predator spends the vast majority of its time doing absolutely nothing. It lies in the shade, it sleeps, it rests. It conserves its energy with a profound stillness. It can go for days without a meal. Its life is not a frantic scramble but a long, patient wait. Most participants in the market behave like herbivores. They are constantly grazing for information, constantly moving their capital from one stock to another, constantly reacting to every perceived threat or opportunity. They are perpetually busy and perpetually vulnerable. Their constant activity drains their capital through transaction costs and, more importantly, drains their cognitive energy through decision fatigue. Buffett, armed with his 20-slot punch card and his massive too-hard pile, operates as a predator. His default state is inaction. His cash reserves are his stored energy. He can sit, motionless, for years, while the herbivores rush around him. He is not bothered by their activity. He is not tempted to join their frantic grazing. He is simply waiting. And what is he waiting for? He is waiting for the herd to make a mistake. He is waiting for a moment of extreme fear or panic, a moment when the herbivores, in their terror, stampede over a cliff. He is waiting for a market crash, a recession, a financial scandal. Because in those moments of maximum chaos, the very best businesses, the fat, slow, prize wildebeest, are suddenly offered at prices that represent a massive bargain. This is when the predator strikes. The long period of inaction explodes into a short, decisive burst of extreme action. He deploys his billions of dollars of stored energy with speed and conviction, buying the world-class assets that the panicked herbivores are being forced to sell. Think of the 2008 financial crisis. As the world was melting down, as the herbivores were being slaughtered, Buffett the predator was deploying billions, making legendary investments in companies like Goldman Sachs and General Electric. On terms so favorable, they were essentially loan sharking to the financial system. His ability to act decisively in that moment of terror was a direct result of his discipline of inaction in the years leading up to it. He had the cash, the focus, and the emotional stability precisely because he had not wasted them on 1,000 smaller, less certain opportunities. The 3 layers are now complete. The 20-slot punch card forces an extreme standard of selectivity. The too-hard pile eliminates the vast majority of opportunities with zero effort, preserving cognitive energy. And the patience predator mindset provides the emotional fortitude to wait, motionless, for the truly extraordinary opportunity. This is not a passive system. It is a system of aggressive patience. It is the quiet, methodical, and relentless work of the architect, who refuses to lay a single brick until he finds the perfect one, knowing that the quality of the fortress is determined not by its size, but by the integrity of its materials. Welcome to Part 3, The Filter Under Siege. A filter's true worth is not demonstrated in calm conditions. It is revealed under extreme pressure. A cheap water filter might work fine with tap water, but will it protect you from a contaminated river during a flood? A psychological filter is no different. Its value is only truly proven when it is placed under the siege of a full-blown, world-altering, career-ending market mania. We will now return to the story that opened this documentary, the dot-com bubble of the late 1990s. But this time, we will not see it as a story of prediction. We will see it as a story of a filtering system operating under almost unbearable psychological pressure. It is a masterclass in the practical application of the 3-layered architecture of inaction. The first layer of the filter to be tested was the 20-slot punch card. As the bubble inflated, Buffett was presented with hundreds of IPOs and investment opportunities in the technology and internet space. The social and financial pressure to punch his card was immense. His peers were getting rich. His own shareholders were demanding action. But he held his ground. He ran each of these opportunities through the punch card test. Is this company so wonderful, its future so certain, and its price so reasonable that I am willing to sacrifice 5% of my entire lifetime's worth of major decisions on it? For companies like GeoCities or theglobe.com, companies with no earnings and business models built on pure hope, the answer was an immediate, almost laughable no. These were not even close to being punch-worthy. The punch card, as a mental model, didn't just suggest inaction. It made the alternative seem like a form of insanity. Wasting a precious permanent slot on such a fleeting speculative venture was simply not a rational option. The filter held. The second layer to come under attack was the too hard pile. The common criticism leveled at Buffett during the bubble was that he didn't get the new economy. This was meant as an insult, a suggestion that he was old and out of touch. But Buffett himself would have been the first to agree. He didn't get it. And for him that was not a weakness, but the entire point. He could not, with any degree of certainty, predict which of the thousands of new internet companies would be the long-term winners and which would go bankrupt. He could not confidently value a business based on eyeballs or clicks. The entire industry was a swirling vortex of technological change, fierce competition, and unknown future variables. Therefore, he did the only intellectually honest thing he could do. He took the entire technology sector, all of it, and placed it into his too hard pile. He made no attempt to be an expert. He didn't hire a team of young analysts to try and figure it out. He simply declared his own ignorance and refused to play a game where he did not know the rules. This was an act of supreme discipline. The ego of the average investor would have been tormented. I must understand this. I must form an opinion. Buffett's ego was non-existent. His only goal was to avoid making a major mistake. The too hard pile was his primary defense mechanism, and it worked perfectly. He didn't need to analyze the competitive position of Ask Jeeves versus Lycos, because the entire category was pre-filtered out of his consciousness. The filter held. Finally, and most importantly, the siege tested the third layer, the patience predator mindset. This was the true trial by fire. For almost 3 years, Buffett had to endure the psychological torture of underperformance. Imagine watching the market go up 30%, 40%, 50% in a year, while your own portfolio is flat or down. Imagine reading articles that call you a fool, a has-been. Imagine your own friends and partners questioning your sanity. This is a level of psychological pressure that breaks even seasoned professionals. The temptation to capitulate, to just buy a little bit of tech just in case, would have been monumental. But Buffett remained the crocodile, motionless. He was not a participant in the mania. He was an observer. He understood that his job was not to keep up with the herd, but to survive its eventual stampede. He knew that the market was a manic depressive, and that this euphoric phase would, inevitably, be followed by a depressive one. His entire strategy was built around preserving his capital and his emotional equilibrium for that moment. He endured the boredom. He endured the criticism. He endured the pain of being wrong, month after month. The predator waited. The filter held. Then, in March of 2000, the fever broke. The hallucination ended. The Nasdaq, which had peaked above 5,000, began to slide. Then it tumbled. Then it crashed. It was a slow, agonizing, 2.5-year collapse. By October of 2002, the index had fallen nearly 80% from its peak. Trillions of dollars of paper wealth were wiped out. Companies that had been worth billions were now worthless. The profits of the new economy were exposed as charlatans. The entire generation of day traders who thought they were geniuses were financially and emotionally ruined. And what of the dinosaur? What of the man who didn't get it? Warren Buffett, the patient predator, emerged from the carnage not just unscathed, but in a position of almost unimaginable power. His capital, the tens of billions he had been mocked for holding in cash, was now the most valuable asset in the world. While others were bankrupt and licking their wounds, he was on the offensive. The crash had created a world of bargains, not just in technology, but across the entire economy as the panic spread. He was now able to deploy his capital into wonderful, time-tested businesses at prices that had not been seen in a decade. His inaction during the bubble was the direct and necessary prerequisite for his hyperaction in its aftermath. He had survived the siege, and now he was the king of the battlefield. The story of the dot-com bubble is the ultimate testament to the three-layered filter. The 20-slot punch card prevented him from speculating. The too-hard pile prevented him from playing a game he didn't understand. And the patience-predator mindset gave him the fortitude to endure the psychological pain of being a contrarian. He did not predict the crash. He simply applied his timeless, robust filtering system, and that system made him immune to the mania. This is the endgame of the architect's mindset. It is not about a single brilliant call. It is about constructing a system of thought so sound, so disciplined, and so robust that it guides you to the right behavior, even when every instinct in your body and every voice in the world is screaming at you to do the wrong thing. It is about building a filter that cannot be breached, and then having the courage to trust it, especially when it is under its heaviest assault. Welcome to Part 4, Installation and the Bridge. We have journeyed through the deconstruction of a cultural myth and the reconstruction of a powerful mental architecture. We have exposed the tyranny of action and have handed you the blueprints for Buffett's three-layered filter. We have seen how this system, the 20-slot punch card, the too-hard pile, and the patience-predator mindset, operates under extreme pressure to produce rational outcomes in an irrational world. Now the final and most critical step remains. It is time to move from theory to practice. It is time to install this operating system onto your own mental hardware. This is not a matter of simply agreeing with the ideas. It is a matter of cultivating a new set of cognitive habits, a new way of processing the world, a fundamental rewiring of your default settings from action to inaction. To begin the installation, you must first accept that your mind is not a clean slate. It is running the old, buggy software of the cult of activity. For the next week, your only task is to become an observer of this software. When you feel the urge to check your stocks, ask yourself, why? Is it a rational need for information, or the illusion of control? When you hear about a new trend and feel the anxiety of FOMO, pause and notice the physical sensation. Where does that anxiety live in your body? When you feel the social pressure to have an opinion on something you don't understand, observe the ego's desire to appear knowledgeable. This act of detached observation is the first step. You cannot fix a bug until you know it exists. Now we begin the installation of the architect's code by boiling down the three layers into a simple, actionable mental checklist that you must run before any significant decision, whether it involves capital, time, or energy. Think of it as your new cognitive firewall. Question 1. The punch card test. Is this opportunity so profoundly compelling, so overwhelmingly certain, that I would gladly sacrifice 5% of my lifetime's allotment of major decisions to pursue it? This question immediately raises the bar for a yes to an almost impossible height. It forces you to compare the current opportunity not to other available opportunities, but to the best possible opportunity you might encounter over the next 30 years. It defaults to an emphatic no, unless the evidence is truly extraordinary. If the answer is not an immediate, table-pounding yes, the decision is made. The answer is no. You move on. Question 2. The simplicity test. Is this opportunity so simple and within my core area of knowledge that I could explain, with absolute clarity, exactly why it will succeed to a reasonably intelligent person in under 5 minutes? Or is there any part of this that relies on factors I don't fully understand, on predictions about the distant future, or on technologies that are outside my expertise? This question forces profound intellectual honesty. It is the practical application of the too hard pile. It is not a test of intelligence, it is a test of intellectual humility. If you cannot articulate the thesis with childlike simplicity, you do not understand it well enough. The decision is made. The answer is no. You move on. Question 3. The predator test. Am I considering this action because of a truly rare, externally generated opportunity that meets my impossibly high standards? Or am I being driven by internal pressures like impatience, boredom, envy, or the desire to make something happen? This question forces you to diagnose your own psychological state. It separates the rational predator, patiently waiting for the perfect setup, from the emotional herbivore, acting out of a need to quell its own internal anxiety. You must be brutally honest about your own motivations. If there is even a hint of impatience or FOMO driving your desire to act, the decision is made. The answer is no. You wait. You go back to conserving your energy. Notice the power of this checklist. It is a system of no's. It is an architecture of refusal. Its sole purpose is to prevent you from doing the stupid, impulsive things that your ancient brain and modern culture constantly push you to do. It is a filter designed to screen out 99.9% of the world, allowing you to dedicate 100% of your focus to the 0.1% that truly matters. When the rare opportunity passes all 3 tests, when it is punch-card worthy, brilliantly simple, and has appeared at a moment when you are acting out of pure, patient rationality, then and only then do you act. And you act with the coiled spring power of the predator. You don't dip a toe, you pounce. You don't make a small bet, you make a huge one. Because you are not gambling. You are not speculating. You are capitalizing on a near certainty, an opportunity that has survived the most ruthless filtering process you could design. You are moving with the quiet confidence of the architect who knows he is building with perfect materials on a solid foundation. This operating system will change your relationship with time. It will cure you of the disease of urgency. You will begin to see the daily chatter of the markets and the media for what it is, a sideshow designed for the herbivores. You will see market crashes not as moments of terror, but as the hunting season you have been patiently waiting for. You will move from being a pawn in the game, pushed around by the forces of fear and greed, to a player who understands the deep structure of the board and only moves when the odds are overwhelmingly in your favor. You will, in essence, stop being a hustler and start being an architect. You will stop trying to win by doing more and start winning by doing almost nothing. You have learned how to build the filter, the psychological discipline to say no. But the power of this filter is directly proportional to how well you define the territory it protects. Saying no to things that are too hard is the start. But what about defining the small, precise area where you have the right to say yes? This is the concept of the circle of competence. It's not a defensive idea, it's an offensive weapon. It's the process of defining your personal hunting ground, the small patch of jungle where you are the undisputed apex predator. Mastering the filter protects you from your own impulses, but mastering the circle of competence is what allows you to concentrate your power for maximum impact. To learn how to construct this impenetrable mental perimeter, to define your hunting ground and achieve an almost unfair advantage, click the video on your screen now. It is the essential next step in completing your psychological operating system for wealth.